This video covers Mitsubishi UFJ Financial Group's financial results for the first quarter of fiscal year 2025, covering the period from April to June 2025. MUFG, or Mitsubishi UFJ Financial Group, is Japan's largest bank holding company. It is one of the three Japanese megabanks, alongside SMFG Sumitomo Mitsui Financial Group and Mizuho Financial Group. Key message: net operating profits decreased by 56.3 billion yen year-on-year to 542.9 billion yen, achieving 24.7% of the full-year target. This decline was largely due to the rebound of large treasury business gains recorded in the previous year, which weighed on overall profit. However, customer segments saw improvement in their net operating profits, which helped offset negative foreign exchange effects. On the other hand, net income increased by 12 billion yen year-on-year to 546 billion yen, marking a 27.3% achievement of the full-year target. The increase was driven by solid gains in customer segments and benefits from bond portfolio rebalancing conducted last year. This puts MUFG on a favorable path toward achieving a record-high annual target of 2 trillion yen in net income. With a 27.3% progress rate toward the full-year net income target, the performance can be considered steady. Income statement summary: net operating profits fell to 542.9 billion yen, mainly due to last year's one-time gains and FX impact. Expenses rose from overseas growth and investments, raising the expense ratio to 60%. However, credit costs dropped sharply, as prior year overseas losses did not recur. Net income increased to 546 billion yen, reflecting a favorable year-on-year improvement of 12 billion yen when excluding last year's one-off KS impact. This bottom-line result represents steady progress of 27.3% toward MUFG's full-year net income target of 2 trillion yen. Domestic loans. Domestic loans grew slightly, led by housing and large corporate loans. Lending spreads stayed mostly stable, though they narrowed for small and medium-sized enterprises. Rising lending rates and low deposit rates supported profitability, reflecting steady growth in domestic loan activity. Overseas loans. The international loan portfolio was stable, with slight yen-based declines due to forex effects. In local currencies, moderate growth was seen, especially in Asia and Oceania. Lending spreads and net interest margins remained strong at subsidiaries like Bank Danamon in Indonesia and Krungsri in Thailand, supporting solid returns from MUFG's overseas loan business. Asset quality. MUFG's overall credit conditions remain sound. NPL, non-performing loan ratio, improved slightly, reflecting better credit quality across the portfolio. Total credit costs decreased significantly compared to the same period last year, mainly because large one-off credit costs booked overseas in the previous year were not repeated. The largest improvement came from the overseas segment, while credit costs in domestic consumer finance remained elevated. Overall, the decline in credit costs and stable NPL ratio suggests that MUFG is managing credit risk effectively, with no major deterioration in asset quality. Investment securities. As of June 2025, MUFG reduced its available-for-sale securities, mainly by cutting domestic bond holdings, especially Japanese government bonds, which saw slight unrealized losses due to rising interest rates. Foreign bonds increased modestly with improved gains. MUFG also sold 296 billion yen in equities under its medium-term plan, with total expected sales now raised to 531 billion yen, reflecting a cautious, efficiency-focused investment approach amid market volatility. Stock price. This is the Japanese yen-based chart for the last 1 year. The Japanese yen stock price is 2,060 yen as of August 5th, and the US dollar stock price is $13.78 as of August 4th. There was no significant change in the stock price following the earnings announcement this time. Current PBR is 1.17, and PER is 11.7. Dividend yield is 3.40%. Compared to the past few years, the current stock price is slightly high from the perspective of PBR and PER. Like many other Japanese companies, MUFG has continued to increase dividends, resulting in a higher dividend yield compared to the past. Conclusion: MUFG delivered steady results for the first quarter of fiscal year 2025. While net operating profits declined due to the absence of last year's one-off gains, underlying trends in domestic and overseas lending remain solid. With 27.3% progress toward its record 2 trillion yen net income target, MUFG remains on track for a strong full-year performance.